Okay, so the bullish and bearish engulfing signal we consider part of the 12 major signals. And again, our 12 major signals are these, and we're going to work on these tonight. So the first thing that we always want to kind of enhance our trading or signals is the T-line. The Fibonacci characteristic that acts like a natural support and resistance level, that if we see a candlestick buy signal, we can stay long until we see a sell signal and a close back below the T-line. Conversely, on the opposite side, if we see a sell signal, we can stay short until we see a candlestick buy signal and a close back up above the T-line. I tell people, if you don't get anything else out of candlestick analysis, just the use of the T-line and the signals will enhance your trading tremendously. All you have to do is become confident that that trading rule works. And we'll, as we go through, I'm going to do the PowerPoints on the signals, and then we'll go to live charts. So the bullish engulfing signal is very visually easy to recognize. It opens below the previous day's candle and closes above the open of the previous day's candle. So the body engulfs the body of the previous day. Doesn't necessarily have to engulf the shadows, just the body. Remember, the important factor of candlestick analysis is the fact, or the final decisions. Where do they open it and where do they close it? Everything else in between is kind of noise. So if we're in the oversold area, stochastics 1233, oversold is below 20, overbought's above 80. The Japanese race traders have a very simple philosophy. If you see a candlestick buy signal in the oversold condition, the probabilities are pretty strong that you're going to be in an uptrend. Now, we've been able to enhance that probability by saying if we see a candlestick buy signal in the oversold area and it closes above the T-line, it dramatically improves the probabilities that you're going to be in an uptrend. Oops, go on to the next one. A bullish engulfing, and this is what we're looking for. Eventually a close up above the T-line. Now some people ask, well, do you buy if you're still below the T-line? And that's pretty much a function of, if you see a candlestick buy signal closing this close to the T-line, you're not worse off, that much worse off to be buying when it's closing above the T-line. On the other hand, if you were way below the T-line, which will show on the Dow, and you see a buy signal, you can buy based on the probability it's going to come back up to the T-line. So convergence analysis is very simple. Where are your stochastics? Where's your buy signal? Bullish engulfing, right smack dab on the 200, closing here at the T-line and the 50. What do we use for logical confirmation of a signal? We want to see it trade positive the next day. We don't want to see it open way down here because it tells us the bulls aren't there. We want to see bullish confirmation, which in this case is enhanced by the fact that it's telling us the T-line's not acting as resistance and the 50's not acting as resistance. So there's lots of days where it gets pretty iffy. But as long as it doesn't close below the T-line, you stay short. Oops. Okay, so observe the obvious. A bullish engulfing right on the 50, pretty much bouncing up off the 200. gap up the next day. So we know that a bullish confirmation is a positive trading the next day. A real positive confirmation is they gap it up after a buy signal. So one of the basic rules is if you see a candlestick buy signal and confirmation, you're in an uptrend. If you see a candlestick buy signal and a gap up after that signal, you're going to be in a strong uptrend. So there's your bullish engulfing signal. Uptrend. This is our common trading price move. If it comes up through a resistance level, what does it usually do? It comes back and tests the resistance to see if it's going to act as support. So if you took profits up here, you can be buying back because what do you think everybody and their brother is watching when it gets to this level? They're waiting to see whether this is going to act as support. If we can see a candlestick reversal signal and a close above the T-line, we can be buying because everybody else is going to see, well, they supported here, let's start buying. We just can happen to see it much earlier than everybody else. If you have a bullish engulfing or even a best friend with a gap open the next day, but then the market turns to trading down and fill the gap, when do you cut bait and close out? I usually use the open for the close of the previous day, that if it starts coming back down through there after gapping up, the bulls aren't there. So, again, that's just based on logic, I guess, that if I was ready to buy on this day, the Japanese race traders have a very simple stop loss strategy. If this is the candle that told us the bulls are in control, and we bought here and it was trading back down below the halfway point of this candle, that tells you the bears are still in control. Close out the position. Little left-right combo, which we'll get to. Strong buy signal, strong sell signal. The bearish engulfing, which we'll get to. Which this is it. The bearish engulfing signal obviously is the opposite of the bullish engulfing signal. Opens above the previous day's close, closes below the previous day's open. This candle completely engulfs the body of the previous day. Now, if it also engulfs the whole trading range, it's that much more powerful a reversal. So the bigger the signal, the more compelling there's been a change of investor sentiment. And we have a sell signal in the overbought area. This is where we have the visual advantage of seeing where this is occurring. A bearish engulfing in the overbought area, right about the same level we had a shooting star, evening star signal. What's that tell us? Well, the sellers are kind of confirming that that's where is the area that they want to be, or they've been selling. This is being recorded, yes. Oh. Bearish engulfing. And observe the obvious. Where was the sell signal occurring? In the overbought condition, right at a level everybody else is watching. Bearish left-right combo, which is a bearish engulfing signal after a doji, which we'll get to later. Where was it occurring? Right smack dab at a level that everybody else was watching. Now, darn hope I'm goofing up over here. Okay, I'm trying to keep everything from rushing onto the screen here. There's your bearish left-right combo, which, again, is a very strong reversal signal. And there's your bearish engulfing signal. If one bearish signal tells you the bears are in control, The more you see it, the more you know that the bears are in control. Just simple logic. And where they occur, bearish signal, right at the level that can obviously be seen as being a resistance level. So, again, very simple visual. Bullish engulfing completely engulfs this candle, previous candle. Bearish engulfs this candle. So, we can enhance that analysis. If we see a bullish or bearish engulfing signal following a doji, we call that a left-right combo. The bigger the signal, this is Roku. When this occurred, what did that tell us? There was a dramatic change of investor sentiment. And how long do you stay short on this one? Until you see a buy signal and close above the T-line. Now, on something like right here, you might have covered your short position because it looked like in the oversold area, they were starting to see some buying and then was waiting to see if it was going to get up above the T-line. But same logic. If this is the bullish signal that told us the bulls were taking control, when they close back below this level, what can you start anticipating? That you could pretty much consider going short again because they failed the T-line and they're back below the halfway point of the candle that told you the bulls were in control. What's the time frame that you recommend for daily trade or swing trade? That's up to each individual. Now, I use the daily chart because my trades are going to average anywhere from 2 to 10 trading days. And I've got the advantage that once I see a sell signal, I know I can stay short as long as it doesn't come up above the T-line. That same chart could be a 10-minute chart. They could have opened it on the 10-minute chart and done this, and the 10-minute chart is going to look exactly the same. The only difference is, on an intraday chart, you're not going to have gaps because usually everything kind of trades smoothly unless something big happens. So here's the left-right combo. We mentioned picking up light the other day because look at all the elements of this short. Where do most people sell? They panic sell at the bottom. So this one closed down or gapped down and did a doji in the oversold area. And look how far away it was starting to move from the T-line. The left-right combo is one of our top-ranked signals and patterns. We have about 18, and if you quantify them from 1 to 18, it doesn't necessarily mean the 18th is bad. It's just kind of quantifying which ones are the best. I usually rank the best or left-right combo as number 2. It usually doesn't even need bullish confirmation the next day. If you're short and you see a bullish left-right combo, close out the position because the probabilities are pretty strong that you're going to be in an uptrend. Yes, Daniel. The formulas are all over the place. We've got a whole package if you're using Thinkorswim, where you can buy the package of some of the high. All our signals are on the on Thinkorswim. We've got a whole package over on MetaStock, Ninja Trader. I think Thinkorswim has our stuff. I'm reading. Oh, so here, yeah. So there's scans for all of these. Mike, yes. Now, a lot of people say, well, what is the best signals? And the answer is, they're all good. We've narrowed down out of the 50 or 60 signals, the 12 major signals, that not only are going to produce a high probability of a reversal, but they're the ones that occur probably 99.9% of the time. So the last few days, and we'll get to the live charts to show what the charts were doing. I think we're over on TradeStation. We'll have to email Abraham to find out whether they ever got that done. But here's what I'm pointing out. Observe the obvious. What was the obvious about this candle today? The obvious is, look where it was trading when the market was off 1,000 points today. This is to kind of enhance the probabilities that when you see this type of reversal signal, it's going to be a lot more strength in the trend. So I'm pointing this out because look what this one did today in a big down market. Look at your bullish engulfing left-right combo in PDLI. What did it do today? Still trading positive. The strength of these signals allow the candlestick investor to be in positions that are going to probably still work in your direction, even if the market itself is trading off dramatically. A left-right combo is a doji followed by an engulfing signal, yes. I am having problem with voice. Ooh, Richard, sometimes it's your server, and what you might do is up at the top right, there's a red X, click on that, and then come back in, and maybe you'll get a better connection. Okay, so the bullish engulfing signal is one of your 12 major bullish and bearish engulfing signal is one of your 12 major signals. Again, you don't have to be a my voice sounds like to be an older white. Now, I'm only 33 years old. Well, maybe a little bit older than that. Wise in the sense that I tell people, if you learn from your mistakes, I'm one of the smartest people you're ever going to come across. That's right. Okay. All right. Now, we're going to go to live charts, but before I do that, whoops, I did that. Hold on for a second. On March 14th, we're going to do one of our mini trainings again. And this is kind of oriented toward everybody. A lot of people that have done it before, or no candlesticks. Let me go down here. It's $47. We advertise it for an hour session, but as everybody learns from experience, they usually go on for 2.5 hours. But what we're going to be doing is we're going to start on a blank chart and then come back and start adding each indicator on here and go through the relevancy of that, of why we add that to the chart. Now, as you can see, my charts are very, very simple. Not a whole lot of messy indicators, just the moving averages. And we're going to go through why those moving averages work and why these charts are kept so simple, because it boils down to one thing. The major aspect of candlestick analysis is the signals. Everything else is something that we can use as confirmation. Okay, so let's go back. Somebody was saying yes. No, that's not what we want. This is what we want. No, that's not what we want. Oh, I'm just goofing up. Where is... I had this all planned out. Okay, there we are. That's not what I want. Here's what I want. Okay. Here is, again, the logic of candlestick analysis. Where, or what does our T-line tell us? Very simply, if you see a candlestick sell signal and a close below the T-line, the probabilities are extremely strong that you're going to be in a downtrend until you see a candlestick buy signal and a close above the T-line. So, if you saw the morning comments right in here, it was, all right, you should be closing out long positions that are looking iffy and adding short positions. Now, did we know the magnitude of this return or this move was going to be this magnitude? Definitely not. But what we did know was the probabilities that it would be going in this direction, that we should be short or have some shorts in there. The fact that we happened to be in the right place at the right time was a function of just being in the right place at the right time because of what the signals told us. But we also know some other simple rules that we can apply to what happens in human nature. Where do most people sell? They panic sell at the bottom. So if we're in the oversold area, what tells us we're starting to see excessive selling? Gap down, gap down. Now, what was the difference between the gap down here versus the gap down here? Because this gap down didn't do a signal. This did do a signal. There's your hammer doji. And what do we know about a doji or even a hammer in the oversold area? If it opens positive, the probabilities are pretty strong. We've had a reversal. What is the best time frame to use for day trader and swing trader? That's up to you. I used to trade, Armin, I used to use the E-mini, or trade the E-minis off the 1 minute, 3 minute, 10 minute chart. Right now I trade soybeans, cattle, the dollar, any of the futures. I use a 10 minute chart as my bellwether and then flip down to the 5 minute for my entry. But I usually look at what my daily chart is telling me is the logical direction that it's going to be moving. So if I think I'm in a bearish chart, I'll get back to it here in a minute. So here, and look, yeah, there's a morning star signal. Yes, one of your 12 major signals. So when you see this open positive, we know that we can start trading, or either covering shorts or trading long, depending on how aggressive we are. Because we know the simple rule that if you see a doji, it's going to move in the direction of how they open it, especially in the oversold area. And they gap down. Remember what the Japanese race traders tell us, most people panic sell at the bottom. So if we're seeing a gap down in the oversold area and see a potential reversal signal, what's the first thing we do? Start looking for a buy signal. And then we had another very clear piece of evidence that the probability is where there's a reversal coming, because look how far away we are from the T-line. Remember our T-line rule, which basically said the further away you move from the T-line, the higher the probability it's going to come back up and test it. So you cover your shorts, pick up some longs, and looks good. But what do we need here? We need to see confirmation that it's still trading positive. Today, when it opened lower and traded back down, what is the thing that we can analyze with a high degree of probability at this point? Our downtrend is still in progress because we're still trading below the T-line. So what's that tell us? Any longs we put on that wasn't working, and I'll show a few, you want to close out, because the probabilities now is the downtrend is back in progress. Now, none of this is technical analysis where you need to know formulas or support and resistance. All you have to do is analyze what the charts are telling you and use the simple rules. Look what happened on the NASDAQ. Now remember, a doji is indecision between the bulls and the bears. And usually that tells you there's going to be a big change one way or the other. Whipsaw days, up day, down day, up day, down day, is indecision between the bulls and the bears. So we've got a few things that we can analyze. If they start trading lower, we've got a bearish J-hook pattern. First, we want to see what happens here at the 200 if it gets to that level. If it breaches that level, now we've got wave 3 that's going to be the same magnitude as wave 1. That means our short positions are still going to be working. Tim, remember what we need from a morning star signal. That was on the Dow. When we saw a morning star signal, what was our first analysis? We needed to see bullish confirmation, and we needed to see it close above the T-line. Well, it did close above the T-line yesterday, but it didn't confirm today. It was back down. So even if we bought here, which I did, when it opened down here, we closed things back out. Because what was that telling us about the T-line? We're still in a downtrend. This one's not a blue ice failure because all it did was come up and hit, a blue ice failure would have been hitting this, coming up, or coming back up, failing, and then coming back down. I'm sure I have a blue ice failure in here somewhere. So again, this is being able to take advantage of knowing exactly what should happen based upon the red ice failure. A signal, morning star signal. Now we wait to see what happens here at the T-line. So people are asking, well, what if you see a buy signal and you're still below the T-line? Well, the first move should be up to test the T-line. The blue ice failure just uses something, a support level that's breached. Doesn't necessarily need to be the 50, just something that you can see has been a support and resistance level. While we're here, we'll take a quick gander at crude oil prices. You can see the same thing if you're trading crude oil. Look at your doji failure. This is the 34. Another doji hanging man. And then a close below the T-line. What's our rule? You stay short until you see a candlestick sell signal and a close above the T-line. Or, notice how they gap this down in the oversold area. You probably put a stop someplace. If I see something gap down, I'm putting a stop because I'm going to be more attentive to a reversal because of where we are in the trend. But notice what's happened up here in the last few days. They couldn't get back up above the T-line. They're still in a downtrend. Gold. There's kind of your morning star signal, your left-right combo, your doji sandwich. Let's make this a little bit smaller. What can we assume about gold? It's still in an uptrend as long as it's staying up. You've had buy signals and observe the obvious again. Is this a bullish engulfing? It could be, but more enticing or more enhancing is it's a left-right combo. And what's this 3-day signal? Looks like a morning star signal. And then you had kind of a doji sandwich right here. So you stay long on gold, which means our recommendation on Newmont Mining was based upon the fact that they gapped way down, gapped back up, did your abandoned baby, which is a 1-day on reversal, and came back up above the T-line. J-hook pattern in progress. No, I'm getting way off track. Oh, so let's do this. The bullish engulfing signal. Bullish engulfing signal. A morning star signal. Told you could start buying here, especially over here. Or when you saw it gap up today, right here at the resistance level, what did you know? You had buying here and a gap up. Just gives you a little bit more insight into being in the right place at the right time. There's your bullish engulfing signal. And where did this occur? Right smack dab off the T-line. What's this tell us? Look what happened today on this one. Well, this is a bear fund. It was still trading positive. Your classic pattern, a fry pan bottom followed by a J-hook pattern. Oh, let's see. I have a bunch of them here. Oh, NVAX was on my buy list last night. Look at your left-right combo, and where did this occur? Right smack dab off the T-line. The Dow and the NASDAQ were down big today. Look what the results of this one was. This will probably be recommended tomorrow because you got a J-hook pattern setting up, and some people say, well, don't you use RSI? So you don't need to. You can see what the relative strength was on this just visually. You don't need to have an index or an indicator telling you that. TDOC. There's your left-right combo. What that tell us about our uptrend? You stay long as this stays above the T-line. Edit. Bullish engulfing. Bullish engulfing. What's that telling you? The bulls are definitely in control. So even in a market that is down big, we're still going to be able to find reversal signals or bullish signals. Left-right combo on D-Dog. Anything else relevant? Obviously, they're supporting it right here on the 50, and they're closing above the T-line. Where do you think the next likely target is going to be? If this was the trend, they could probably take it right back up into that trend. Hold on to your individual ones, Amy, until I tell Jim to do the double line, then put in what your requests. How do you trade volatile markets like yesterday with big swings? Well, if you think things are going up, you trade off your 10-minute chart. I'll get back to NVIDIA here in a minute. But remember, what is the nature of the market right now? Up, down, up, down. So we have, even though this was up positive yesterday, I think I commented in the chat room to say you still have to watch to make sure you stay above the T-line because the character of the market is pretty volatile, which means somebody said, should we be buying with both feet? And I said, no, because tomorrow they could open the market down 500 points. Not that I thought they were going to do it, but that's what the market was telling us. So, right, yes. And you can sit on the sidelines. You don't have to be in this market right now. You can always wait until you get confirmation of which way this market is planning on going. I think I did all the bullish. And then you also have this red robin. Notice your bearish engulfing signal starting wave 1, wave 2, going into wave 3. Yes. So right now, if you're doing any trading, it better have a pretty compelling chart. And if it doesn't, and I'll go back to, I bought calls on NVIDIA going into the close yesterday. Actually, right about as it came up through yesterday or the previous day's open. Because logic says that we're going to close above the T-line, we should be in an uptrend. But when it opened here, it tried to come back up and closed here. We closed out the position. Now, this is a perfect example of when everybody tells you to cut your losses short and let your profits run. Common sense built into candlestick signals tell you when the bulls or the bears are in control. And if they are closing down here at the lower end of yesterday's trading, who do you think's in control? The bears are. Now, could it open up and go right back up? Definitely, but you could always buy it back. How about the S&P chart? Looks like a dead cat bounce. That could be. Not so much that it's because it's a dead cat bounce, but when they were that far away from the T-line and they gapped down in the oversold area, what was your first suspicion? That they were eventually going to come back up and test the T-line. They did. Maybe they bring it back down here or even further. Now, why would they do that? Because what was the investor sentiment for months during this time? Everything was rosy. Everything was bullish. What happened here? That bullish confidence was really broken, and everybody's investor sentiment is pretty negative. Well, there was hope, but then it's still broken. It's not, everybody's not confident that we're starting to head back up yet. Okay. All right, let's take a look at the biggies real quick to get them out of the way. Look what happened to Amazon. Tried to come up, failed. What do we got? Probably a possibility of coming back to the 200. Same scenario. Some people ask, why do you have the 34 on here? Because the 34 sometimes acts pretty good. What do you need to see on the chart that constitutes a buy and sell signal? The signals. That's what we're looking at, is the signals. There's 12 major signals. So if you, some people ask, book number 2, my high profit candlestick patterns book. It has the 12 major signals and the patterns. Yep, so your bread and butter, your ABCs, your brick and mortar are learning the signals. Those are what changes investor sentiment. Then you learn the patterns. There's only about 6 or 8. But the reason we can recognize these as high probability trade reversals or patterns is because human nature works the same way time after time. So anyways, we failed when we came up on Apple. If this opens lower, you're going to have a bearish flutter kicker. That means they're still taking it down. When we bought NVIDIA, it was on the basis that we expected it to go higher. When it came back down here, we closed out the position. Again, if you cut your losses short, which everybody tells you to do, but in the 40 some odd years that I've been trading, I hate to think it's been that long, they never tell you how to cut your losses short and let your profits run. Lewis, I don't look at the VIX, but you can use the VIX if you want to. I don't need to. I'm using the candlestick signals, which are usually giving me a high probability of the direction of the price moves. And Tesla. Oh, that was Netflix, not going anywhere. Tesla's still trading back below the T-line. So not a good evaluation as far as knowing whether we're heading up or heading down. So we have a Doji. And remember the Doji rule. The price will usually move in the direction of how they open after a Doji. Watch to see if they don't open it lower. That means they're more than likely coming back to test the 50 again. How can I download your free ebook? I don't know, is it a free ebook or is it Maybe if you email Abraham at candlestickforum.com, he'll show you how to get. We've got about, I don't know, 40 training videos that, as a member, they're discounted to people. It's stuff that we're going to be looking at every single day. But if you want something that you can go back to and look at it whenever you want to increase your memory analysis, you probably want to have those. You download them and you have them forever. Do you ever dissect a day candle into shorter day segments to see which? Yeah. If I'm I was trading wheat today. That would take a little side jaunt here. So look at the daily chart on wheat. Still heading down. So this is today's trading. This is after hours trading. So I trade off the 10-minute chart. I can see when it's time to buy. I can see when it's time to sell. I can see when it's time to buy. There's my Morningstar signal. I can see when it's time to sell. And I can see when it's time to go short. So if I want to get a little bit more specific, I go to my 5-minute chart. And it will give me a little bit faster notice to kind of project what my 10-minute chart is going to do. So remember, candlestick signals are the graphic depiction of everybody buying and selling during a specific time frame. They work just as effectively on the 1-minute chart as they do on the monthly chart. Bruce, yes, all these evening sessions are recorded. Okay, let's see. Now let's get back on track. Where am I? Okay, so we also have what we call convergence analysis. Convergence analysis is when you can put a bunch of analysis telling you you're probably in the right direction at the right time all together. So look what's happening here on Luckin. LK. Kind of got the slow curve. Where is it trading? There's our Morningstar signal, trading up off the 34 through the 50 through the T-line. What else can we analyze on this chart that everybody else might be analyzing? We've got pretty much a wedge breakout. So got a fry pan bottom, got a Morningstar signal, you're closing back up above the T-line and the moving averages, and you broke out through the wedge. Extremely high probability that you're heading higher. Zig, did you fall asleep on your... So you do determine expectation bearish or bullish on a daily, or do you do your entries on a 10-minute? If I'm trading intraday, I'm using the 10-minute. If I'm trading on a daily chart, I'm usually finding the signal or pattern at that night when I'm doing my scans. Then I see how, is that the cat? So we were buying this one, or we recommended this one today because everything was setting up. So again, observe the obvious. This was still up. It had been up like $1.80 at one time, but it was still up 41 cents, and the market was off 1,000 points. And so I'm not saying that because we did a great pick. It's the probabilities of seeing things that are leading to a bullish trade are probably still going to be effective even when the market is down 1,000 points. So we've got the advantage of seeing exactly what's going on in investor sentiment and individual charts. So here's kind of a left-right combo on ENPH. What did it do today? There's your J-hook pattern, and it traded positive today. Newmont Mining, we knew was trading positive ever since the island reversal gap up, and gold prices continue to move up. So we're more apt to be putting ourselves into positions that have the higher probability. Again, here's our classic pattern, a fry pan bottom followed by a J-hook. This one traded up pretty good today, but closed just slightly lower. But what's our ultimate trend analysis of this one? We pretty much stay long as it stays above the T-line. And we've been in Rite Aid because of its kind of cup and handle pattern. Now, it traded off 69 cents today. Was that a sell? You know, look at the nature of this candle. That's a doji, an indecisive selling day. But a very, very informative chart pattern. If it opens positive, what's it telling us? The consolidation of this uptrend is over, and you can see it was consolidation because when they sold off, it wasn't very compelling. If it opens positive, it tells us the consolidation's over, the uptrend is still in progress. If it opens lower, simple doji rule, it's still going to move in the direction of how they open it. You might take profits because they're probably coming back down to test the T-line. This is applicable to Forex. Candlestick signals is not for any specific market. It is the gauge of what's going on in investor sentiment, which is kind of a graphic expectation of what's going to go on with fear and greed. So you can trade the Forex, stocks, bonds, currencies, tulip bulbs, anything that has fear and greed in it, which is all investments. So we've got something like CGen, which was still working because it's still trading above the T-line, but notice the doji again. So it's still telling us we're above the T-line, but it's also giving us a good indication with the doji. If it opens lower tomorrow, you close it out. If it opens positive, it's telling you it's still staying up above the T-line. So today we had still some of this GSX, but look what it's doing. It did a doji. Stochastic's heading down. So here's the whole ramification of candlestick analysis. Which direction do we expect this to move from here? Well, if you can't tell if this is going to go up, down, or sideways, what's that tell you about your probabilities of that trade? You're sitting in some place where you don't have any idea what the probabilities are. We're looking for charts where we can tell where the probabilities are that we've seen a buy signal. Exactly. We don't have any edge. So what do most people get emotionally involved with? The trading entity, not what their money is doing. So if I'm sitting here and I've got $20,000 worth of little green pieces of paper sitting in something that doesn't give me any probability or any edge, I close it out because I can go find something like a chart like this that I've got a pretty good probability of expectation that this is going to go higher. So what's my big fear of holding on to something like this? Is that if I close it out and it starts going positive, boy, was I stupid. But right now, I don't know whether it's going to go up or down or sideways. So what I found is I get rid of that fear, which is kind of the basis of people holding on to positions because they still think it's going to go up. And I've moved it to something that looks like this, where the probabilities are pretty strong. I'm in a J-hook pattern. It is going to go up. Even if GSX goes up, more than likely this is going up also, and my probabilities were much greater on this chart. So this essentially is kind of the process of taking my emotions out of my trading, is constantly cultivating my positions to be in charts that tell me I've got a pretty good probability it's heading in my direction. Our recommendation today on CYH was based upon Doji gap up through the T line. And notice what it did today on a day where the market was off 1,000 points. So remember, the candlestick signals are the accumulative knowledge of everybody buying and selling during a specific time frame. And when they were still buying this, everybody knew the market was trading off, but somebody was still buying that stock. That one was acting better earlier. So here is a very little relevant tidbit. Look what happened on the buying right here on the T line after this big pullback. What signal is this right here? Anybody? There you go. Most of you got it. The trick question, yes. It is not a signal. It's not a bullish engulfing, and it's not a piercing signal. A piercing signal would have had to have opened below the low of the day and come back up. So this is not a signal. So why is that relevant? Because if this was something of great consequence as far as a signal, the Japanese race traders have had 400 years of illustrating what that signal was and what the results would be. And it's not there. So would I be buying that? No. Now there's kind of a piercing signal. It opened at or below the low of the day and closed halfway up this candle. That's got more probabilities of moving up than one that didn't have a signal. And you can see what the results have been on this one, not going anywhere. Now, the reason we're familiar with these charts is, look what was happening down here as this fry pan bottom breakout, and they started gapping it up. A lot of people ask, well, shoot, how do we know when to take profits? Well, what's our simple rules of human nature? The further away you move from the T-line, the higher the probability it's going to come back and test it. So if you were buying stock at $9.40 and 2 days later it was trading at $40, $38, what do you think everybody else is thinking about? Probably taking profits. How do we know when to take profits? Well, first of all, we've got a gap up in the overbought condition. Secondly, look how far away we are from the T-line. So what's our trading strategy? If it opens positive and trades positive, you immediately put your stop at where it opened, because logic says if it goes up and comes back down through there, it's probably going to create some sort of sell signal where the profit taking has occurred. The second thing you can do is it's trading up, you flip to your 10-minute chart. Why would you trade a 10-minute chart on a daily move? Because if we already can see the daily move has moved way too far away from the T-line, the 10-minute chart will tell us where the selling has started taking profits. So instead of taking profits here, maybe you got out up here. Jim, I always disagree with that statement, because I'm trying to figure out what, and I'm saying this because of me. Let's take a look at Tesla a while back. Look at what was happening in Tesla. So the reason I disagree with the you can't go broke taking a profit is because if you're buying stock or buying something, if you don't try to maximize your profits, which we have the capabilities of doing, as long as it stays above the T-line, what do most people do? Well, in my case, back before candlesticks came along, if I had a profit, it was so rare that my biggest fear was that if I didn't take profits, and I let that go to be a loss, boy, would I look stupid. Now, what's our basic rule of candlesticks? The further you move away from the T-line, the higher the probability it's going to come back and test it. So what were the indications telling us we should start looking to take profits, even though when it was trading up here, we still didn't have a sell signal? We had indications. We were up in the overbought condition. We started seeing exuberant buying. Japanese rice traders always tell us where do most people buy? They buy exuberantly at the top. How can we tell there's exuberance? Because you're in the overbought area and they're starting to gap it up, and they gapped it up again, and up here, where are you? Look how far away you are from the T-line. So what's the simplest way to take profits? You flip to your 10-minute chart, and as soon as you see a sell signal and a close back below the T-line, you take your profits. For a piercing signal, the next bar opens lower than the low of the previous day. Do you then look to see if it closes above the midpoint range or closes above midway up the previous candle? Oh boy. Let me figure out what you just asked. For a piercing signal, the next bar opens lower than the low of the previous day. If you're in a piercing signal and it opens lower, you don't want to pay attention to it. You don't want to pay attention to it until it starts trading back up above the piercing, the close of the piercing signal. Because until it does, the bulls aren't in control. What are your two main? Oh, Mark, the blue line and the red line, this is the 200-day simple moving average. This is the 50-day simple moving average. The reason we have those on our charts is not because we use them to make decisions, because those are the levels that most money managers around the world make decisions about entering and exiting their portfolios. We're just watching to see what type of graphics occur. I'm trying to figure out something that would show. Yeah, there we go. Ah, that one's not a good one. Let me see if I can find something that's more relevant. Yeah, these are where we can see exactly what's happening at those levels. So a lot of people say, well, why don't you use the 200 and the 50 exponential moving average instead of the simple? Because we're not using those moving averages. We're seeing what everybody else is using and what they're doing at those levels. Oh, he's asking about the definition of a piercing signal. I can't remember which one. Piercing signal. This would have been a piercing signal where it opened below the previous day's low and then closes halfway up this candle. Not the range, the candle itself, the candle body. Is that what you were asking? Do you enter into a trade on a 10-minute chart on retracement after you see the direction of daily chart, whether it closed above the T line? Do I enter on retracement? No, I don't. If you're saying that if you see a buy signal and then it pulls back, do you buy on the pullback? And the answer is no. I would rather be buying in, because if it's pulling back, who's in charge still? The bears. I would rather buy into strength, because that's exactly what that bullish signal is telling me is happening, as the bulls are taking control. If you see a candlestick buy signal and it opens and starts trading lower, I'm waiting for them to stop the selling, and I'll try to find one. So that's called the immaculate execution. I'm trying to find something. The immaculate execution is that you see a good signal and it starts moving up, and you're sitting there thinking, all right, I'm going to wait for this to pull back so I can get in at a better price. Now, there's two fallacies to that thinking. One, if it's pulling back, what's that telling you about the strength of the bulls confirming that signal? It's not there. Two, you're such a good trader that you're expecting that when it pulls back and you decide to buy, you've bought right at the time that it's going to turn around and head back up, because you're that good a trader. That's wishful thinking. I'm buying on the basis that if I see a buy signal, I want to see bullish confirmation the next day. Does the piercing signal have the same relevance in either an oversold or JJ? Remember, a candlestick buy signal is what you're looking for in the oversold area. A candlestick buy signal in the overbought area doesn't mean very much. A candlestick sell signal in the oversold area doesn't mean very much. You're looking for a candlestick buy signal, a candlestick sell signal in the oversold, candlestick sell signal in the overbought area. February 27th, right about here. What are we looking at on the 27th? Oh, January 27th. Immaculate entry. Well, here you had more relevance that when it came back here, you could observe the obvious. So it's sitting right here on the 50. If it opened positive the next day, what did that tell us about their decisions here at the 50? That was the time to be buying. What was more compelling? When they were finally getting back up above the T-line. Okay, we haven't even gotten to the good ones yet. Oh, so here's the example I was given here. This is not a signal. This is kind of your expectation, or that if it's not a signal, it probably doesn't have any relevancy. What we're looking for are the ones where you do have a signal. You're probably going to see more strength. That's kind of your piercing signal. I think they did. Didn't Costco report, and they were trading up here a little bit. We kind of remarked on that earlier. That's kind of your piercing signal, almost a bullish engulfing signal. So that would be your piercing signal, bullish engulfing, belt hold signal. Remember, a belt hold is the sumo wrestlers, the Japanese traders, the guy, sumo wrestlers, one's trying to back out of the ring, the other one grabs his belt, pulls him back into the ring, and they're back to wrestling again. Simple two-piece criteria. It has to open below any of the previous trading of that day and close more than halfway up that candle. Thank you, KC. Okay, so something like this, which Trader Abe pointed out in the chat room today, it was starting to trade wildly. There's your best friend signal, Doji gap up. This is what we call the message. The message being it gapped up, but it traded lower. Dark candle. Was that bad? Told you there was profit taking. But what was the message? The message was they gapped it up. There's lots of strength there. So what are we looking for? We're looking for the profit taking to be over. You could have been buying on that day because that told you, this whole scenario right here told you there was a lot of strength coming into this one. INO. There's your fry pan bottom, support off the 50. There's your Doji best friend breakout. That's what we expect of a fry pan bottom breakout. Now, remember, a lot of people say, well, you're up here in the overbought area. The difference between a signal is we're looking for a signal to occur in the oversold area. A fry pan bottom, J-hook pattern, cradle pattern, all likely going to break out when you're already up in the overbought area. Costco is down now, all right. Down, well, let's see, if it closed at 350, all right, you ought to see. Now remember, what happens after hours has very little relevance as far as what the price is going to do, because this could trade 3 million shares during the day and maybe 40,000 shares at night could move it all around. The important indicator is where is it going to open. That's telling you where all the big money have put in their buys and sells. Okay. Yeah, I thought it came out around 4:15. All right, so Smegmo. There's your bullish engulfing. Is it relevant? Look how it's kind of supported right here at the 50. Where do you think the next likely target's going to be? Up here. There's your message. Profit taking, profit taking, profit taking. The profit taking's over. Now look for the buying to step back in. Yeah, Lou, I've got 3 cuckoo clocks here in the office. And my game is to try to have them all go off at the same time, which I can do one time, and then the next day they're all at different times. So gives me something to do. So Red Robin, I don't know why I have that over here. Oh, bearish engulfing. There's your bearish engulfing signal, starting wave 3 to the downside. The golds have been acting well. Nugget, still good. GDX, still acting good. We recommended Newmont Mining a couple of days ago, still acting well. So the gold itself, as you can see, the big morning star signal, J-hook type pattern, you're still heading positive. Oh, Marvell, there's your piercing signal. Open below any of the previous day's trading. Now, just the fact that in this case it opened below any of the previous day's trading, it actually gapped down in the oversold area. What other aspect can we see that made it more relevant? There's a reversal. Look how far away it was from the T line. So if you were buying here, what was your first target to see what it happens once it got to the T line? Yeah. Yeah, I was in Sandy and I were in Dallas after giving a presentation one time, and we went to one of those little antique malls, and there was one of those big cuckoo clocks. The whole clock itself was probably about 3 feet tall, and it was, I think, $900. And I was thinking about it, and didn't know how much they were. So when we finally got home, I looked it up, and they usually sell for $1,400–$1,500. So a couple of days later, I called them to say if they could buy it and they could pack it up, and it was already sold. So I was constantly looking for one of those giant cuckoo clocks. See, we did Marvell. Oh, Kroger. Kroger has been running pretty good. Again, there's your Morningstar type signal. There's your abandoned baby. There's your Doji sandwich. And there's your J-hook pattern breakout. So as something as sluggish as Kroger, you can still make money by identifying the patterns that telling you there's something new coming in. And people had been in the chat room had been in this one. You can see where it was time to buy. But then notice what happened yesterday. In the overbought area, you had a shooting star signal. So again, where is the logical place to put your stop? Right there. Because logic says if this is still heading higher, you're fine. If it came back down through there, remember, a shooting star signal tells you if they start trading lower, close out the position. That's where you would have stopped out. So anytime you can put a stop in at a logical place, you're going to find that using candlestick signals, you're going to be a lot more pleased that you got out at the appropriate time. There is your bearish engulfing signal, starting your downtrend on Penn. There's your bearish engulfing signal on Cheesecake Factory, right smack dab off the 50, kind of giving you an evening star signal. So this is at the low or halfway. At the open. Are you talking about which one it was? I can't even remember what it was. Oh, X-Air. If this is your shooting star signal, you put your safety stop right there. If it opens and trades down and trades back up, you're okay. If it comes back down through this level, you've got a pretty good, strong sell signal after a shooting star. More than likely, it's going to come back to the T-line. Are the NASDAQ, Dow, and S&P forming bullish haramis with oversold RSI on a weekly time frame? I don't trade off the weekly time frame. But if you do, your stochastics are still heading down, so you still need to see bullish confirmation, which could happen because we still don't know what's going to happen in tomorrow's trading on a daily. But if this starts trading lower on a daily, now that harami in the weekly is going to get lower and lower. Thank you, Andre. Yes, I know most of them come out of Germany. With a spinning top means downward movement, correct? With a spinning top. Spinning top is kind of the same as a doji, yes. Which also means it's going to move in the direction of how they open after a doji. So look at your bearish engulfing here on VRRM. Started your downtrend. So the shorts I bought some more puts. I had made good money on the puts on Carnival, and I rebought puts because this looks like a wave 1, wave 2, going into wave 3. Same thing with Norwegian. We started buying puts right here. Look at this, was a Doji little gap down, telling you they were failing the T line. Kind of a dumpling top, but you can see when it came down through this level, that was the last support level. Now, did we expect this type of price move? Definitely not. But as I said before, using candlestick signals puts you in the right direction at the right time. You might not know that this is going to be the magnitude of a new direction, but at least you're taking advantage of it. How many days to expiration do you buy? Boga, that's pretty much up to each individual. The more aggressive you are, the closer in you trade. The closer to the money you trade. So that's something that each individual makes up in their own mind of how close or how far out they want to trade. What we're trying to show is what direction something's going to move, and then each individual will decide what strategy or how aggressive they want to be on that trade. Now, I usually trade somewhere around 2 to 3 weeks out because I know that if something's going to happen on the bearish side, it's going to happen right now based upon candlestick signals. No, I just, it looks like it's just starting wave 3. And that's up to each individual either, whether they want to trade in the money, at the money, or out of the money. Do you set an activation rule in your options to serve as a stop loss? You can. There's some brokerage firms that give you the function of you can do what they call a contingency order that says if this stock comes back down or comes back down and hits 50, close out my options. Now the problem with that is it's a market order. So if your options were bidding 2 and they were asking 250, I'm just picking out numbers, more than likely they're going to close you out immediately closer to the bid side of the 2. Whereas if you were sitting there watching it, you might say, all right, let me see if I can get out at 220 or 225, about the halfway point. Which moving averages do you use on your charts? You're looking at them. The 200 is the red, the 50 is the blue. Those are simple moving averages. The 34 is an EMA, and the T-line is the 8 EMA. Yeah, I use Thinkorswim because I can trade stocks, options, and futures out of that one account. I don't have to move money back and forth. All right, so we know the cruise lines are having problems. They're in bearish J-hook patterns because of the lower bookings that are coming in. I think they said their bookings have dropped off by 40%. The casinos are still trading lower because they are places where you could catch the that's when you could catch the virus. Whose handwriting is this? This is Carnival something. Same scenario. Good bearish wave 3. The dumpling top. Is it CGRY? No. Dang. What terrible handwriting. I can't figure out what this symbol is. So only typed it in 7 times now. So we're going on. It was a dumpling top breakdown. There's BJ's Restaurant. Look at your kicker signal. Look at your failure. Another bearish engulfing. And now they've broken this level. You're in wave 3 to the downside. And CVET. That may be it. Jay, thank you. Why do I have CVET in here? I have no idea. Man, I've got to stop drinking when I'm doing this stuff. There's kind of your, double top. And it looks like it's broken this level, so more downside. This, let's see, a dumpling top. Now, dumpling top's like a fry pan bottom. It's a big rounded top. Crocs was a big dumpling top, and this is what we were looking for, is that big breakdown, which we started shorting in here, and obviously made some very good money with this one. Just Weight Watchers. No, not so much a dumpling top, but you can see where the failure was. You stay short. Who pointed this one out today? Was this Carl? Look at the failure here. Not only did it come up and fail at the T-line, but look how it failed. There's your bearish kicker signal. Your strongest sell signal. What pattern? Bearish J-hook. Where do you think the next target is? Wave 1, wave 3 should be taking you down to the 200-day moving average. Now, why is this such a strong short? Because of the kicker signal, the bearish kicker signal. And some, there's your bearish best friend. Another one that could be shorted on weakness. Because of that gap down from a doji, wave 1, wave 2, wave 3 heading way lower. Wow, kept us way over time. There's your bearish left-right combo. Where did it fail? Right here at an obvious resistance level of 34. That one can be shorted. And AMRN. There was your meeting line. What was it going to do? It was going to come up and test the T-line. What did it do when it got to the T-line? Pretty much failed. So you can start shorting this one on weakness. What was the one that was some? Some always reminds me of addition, which reminds me of Noah opening up the doors and letting out the animals and saying, "Go out and multiply." So after a little while, he went back into the ark and he could hear some crying. He went over to one of the bins and there was 2 little snakes in there. He goes, "Well, why are you crying?" And they go, "We can't go out. We're adders." All right. This is now going to be telling us what to look for. Let me see if I can see what the after hours. Oh, the after hour futures are still showing down 220 points. Expecting more downside. But remember, what the futures are doing right now doesn't mean a hill of beans for when what will happen tomorrow. Oh, and adders are snakes. They're a type of snakes called adders. In your options room, do you come on twice a day like this trading room, or do you do a couple of these evening sessions for them as well? I come in twice a day. A lot of the people in the options room are also in the main room. But we've got some very good traders in there that I learned from. But it's a process of, you got some very experienced traders in there. So not only are you analyzing which ones charts have good long or shorts, but now you can figure out or have somebody kind of guide you on what would be the best trading strategy. Should you do a debit spread? Should you do a credit spread? Should you buy calls or puts outright? So it gives you a little bit better insight that just because the stock's going up, you don't buy the calls. You might be better off buying the bullish spread, that type of thing. And we will be doing for members probably here in the next few nights. We'll do another spread, both the credit spread and debit spread session. Again, everything we do is basically just common sense logic from the candlestick charts. So, all right, any general, let's see, I did mention on the 14th for 47 buckaroos, we're going to walk through how you set up your charts and the indicators you want to put on them and the logic of why those indicators are on there. And then once we got it all put together, then the kind of the common sense aspects of candlestick analysis that make or enhance those indicators to be much better confirming indicators. Armin, email abraham@candlestickforum.com. Becky, you want to type that in for him, please? We can do a session. Tony, unfortunately, the session on futures is just very simple. It's remember that candlestick analysis came from the most basic commodity in the world, rice. And I always like to point out the fact that the Japanese rice traders did not become wealthy from trading the most boringest commodity in the world. They became legendarily wealthy because of one simple indicator, and that's human nature. Do you do future options? No, I try not to get that sophisticated. You can. I've got to divide my time up as far as doing the chats, doing the research, that I just do the simple trading that I can sit here and watch. Chris, yes, these are all recorded. Unfortunately, this is going to be a long recording tonight. Okay, yes, and if you want something, email me as far as a training session. We do training on how to set your logical stop losses, how to do your scans, how to prepare to take profits, which option trading strategies are the best. Trying to think. Which are the most powerful reversal indicators, the top rank signals and patterns. So the thing that kept me going on candlesticks was everything I looked at, I could say, yeah, that makes sense. Or I already knew that. I just did never see it in the graphic a graphic demonstration. Okay, I guess with that, Jim, go ahead and do the double line. And in 3.2 seconds, do the next double line. Okay. SRNE. That's a little left-right combo. Make sure your volume is good. You can be buying that one on positive trading tomorrow. Just make sure it doesn't close back below the T-line. Pfizer, this is one where if I had been long and it opened down here today and closed down here, I would have closed it out. If you didn't close it out, it has to open positive and trade positive tomorrow to stay in it. Codex, another one that you can get ready to buy because look what it's doing. It gapped up and did a doji. So if it opens positive tomorrow, what do you got going on? You've got the bullish flutter kicker, which means if it opens positive, the doji rule says it's going to trade positive. If it trades positive, if you took out this little flutter, you have a kicker signal. So that one is one that you can get ready to buy, especially on positive trading. OPK, big breakout. Now you have to trade this one off your 10-minute chart. But expect at least a 45 degree. The Qs short, again, if this opens, the market's open lower tomorrow, this one's going to trade positive. Rite Aid pulled back, but it didn't do anything compelling as far as the selling. So if it opens positive, you still got a bullish double doji setup. Equinox, stay long. Nice bullish chart on the for the golds. TDOC, stay long. ADVM, a bullish engulfing. You can get ready to buy this one on positive trading, kind of off your left-right combo today. Makes it very simple. If it opens positive, you can be buying. Just don't let it close back below the T-line. No, Sally, where does an evening star have to close to become an evening star? Whoops, I could go to it. Where is it? There it is. It would have had to have closed back below the halfway point of this candle. This right now pulled back, but notice how it's indecisive. So it makes it very simple. If it opens positive, you've got a double doji setup, still trading positive. If it opens lower, expect more profit taking, probably back to the T-line. Remember, use your doji rule. IBIO needs to open positive and trade positive. If it trades back below today's low, that means you might now be stuck in a downward channel. Run was a pretty good chart today. There's that kind of double doji sandwich. So you stay long, just don't let this one close below the T-line. Bristol Myers needed to get up above the T-line. If you're looking to go long, you can buy if it closes above the T-line. If it opens lower, it's failed at the T-line, you might consider going short, but it probably wouldn't be your most active short. BIRT, you stay long, but now what's your analysis? Look how far away you are from the T-line. If it opens lower tomorrow, I would start taking profits. If it opens positive and starts trading positive, I would go to your 10-minute chart and see when it starts trading back below the 10-minute T-line. Space, we closed out a couple of days ago because after it did a bullish engulfing, it kept failing at the T-line, which told us they weren't moving up. This one we're out of right now. BABA, nothing of any great consequence there. If you're long, it has to open positive to stay in it. NetTees went up pretty good. It was up like 8 points at one time. It's still in an uptrend, so all you can do with this one is use the T-line as your stop. T-Docs, I think we did. Stay long. Disney, stay short. You might be in wave 3 to the downside. Owens, Illinois, stay short. Wave 3 to the downside. Oil, failed at the T-line. You can stay short on this one. ARR. This one, if you were, I can't tell what color that is. I'm colorblind. Yeah, the fact that it gapped down makes it pretty simple. If this opens lower tomorrow, close out the position. It's lost its fizzle. Did we do AD, VM? Yeah, bullish left-right combo, Z-Lab. Z-Lab, nothing. I would have closed it out today with it closing back below the T-line if it had been long. Right now, it's not going up or down. I'd be someplace else. NK, same scenario, not going anywhere. I'd be someplace else. And VXTR, that one's a good-looking chart. You look at a little inverted hammer right here on the T-line. You can get ready to buy this one on positive trading. Bed Bath & Beyond, stay short. You can see where it failed. Still heading down. Macy's, stay short. Wave 3 to the downside. I think we did this one, didn't we? Yes. Good oil or good gold stock. We did those other ones. All right. Will we get the link to the recording? Yes. This Texas Instruments. Nothing there. Wouldn't be long or short. When I first went to, Amy, I forgot that one. When I first went to work for Kidder Peabody at the ripe young age of 21 years old in Houston, Texas, my office manager, good old Texas boy, had a friend in Dallas who kept telling the story that he had a couple buddies that, back in the early 60s or sometime, they came down and said, we need $5,000. We've developed a computer system. If you put in $5,000, you can have 1/3 of the company. He goes, oh, no, that's risky. He would have owned 1/3 of Texas Instruments. I can't get the E-minis over here. I don't think. ES. No. F.ES. No. I don't know why I can't get the E-minis over here. Sorry. The definition of a morning star signal. Which ones did it? Oh, the Dow did it. A morning star signal is one of your 12 major signals. This is, Gail, this should be your basic learning. A big down day, a day of indecision, and the third day opens positive and closes more than halfway up this candle. Those 3 days are a morning star signal. The opposite is a big up day with a day of indecision, and the third day closes more than halfway down that previous candle. Sienna. You can stay long, indecisive today, but right now, as long as it stays above probably the 50 and the T line, you can stay long on this one. And IPHI, there's your left-right combo. There's kind of your scoop pattern. And observe the obvious. Did I have this one written down already? But observe the obvious. What type of day did this have after a strong reversal signals? It still traded positive. So that's the whole point of recognizing the patterns, because the patterns are still going to probably work even when the rest of the market is going well against you, because they are a buildup of investor sentiment. OZK. Did that not come up? OZK. Stay short right now. If I was short, I'd have a safety stop above today's open, because logic says if it comes up through there, this area is acting as a support level. Lulu, I think Lulu was a nothing chart. Yeah, you could go short if you wanted to. Yeah, you could go short if you wanted to. And SWKS, this one you can go short with the expectation it's probably coming back down to the 200. We did Bed Bath & Beyond, stay short. Okay, so it'll be important to see what the pre-market futures are showing about 10 minutes before the market opens. If it's trading lower, expect another test of the lows. All right, everybody. Keep your calendar clear. March 14th, we will be showing how to set up your charts. Even though you already know how to do it, you'll see what the logic was of putting each one of those indicators on. All right, everybody. Have a good evening. We will see you bright and early in the chat rooms. We'll see you then.